Good morning and welcome to the new episode of Dr. Lamba's Awakening Call. Canada is a country of paradoxes. It's in a G7 and as such one of the strongest economic power. But looking at the number of the homeless in Canada and then the magnificent contribution to the homeless of the world is a paradox. Nothing for the people living in Canada, then adverse balance of trade, and then we avow that we are peaceful and yet give millions of dollars to help another country fight a war. Well, that's politics. But economy is much more important. The unprecedented loss of over $500 million to the central bank, the Bank of Canada, can be a crushing blow to the physical health of the country, and it is. But did you hear any discussion in the political circles, except in academia and in some newspapers concerned with economics? Nobody has talked about it. The Bank of Canada lost $522 million, more than half a billion, in the third quarter, just in the third quarter, not in the whole year. The whole year loss might be much more, and is the first such loss in the history. The Bank of Canada has dramatically expanded its assets during the pandemic. Imagine making profit, expanding assets, and that was a part of the government bond purchasing program, and also known as quarantine saving. The policy was part of the central bank's effort to stimulate the economy. Good. And that expansion of assets is showing that the central bank, as it paid the government bonds with the creation of the settlement, ultimately lost in 87 years of history $522 million. The autonomy of the bank, the independence of the bank has been compromised by the purchase of these bonds. In the central bank's latest quarterly financial report, it says that the revenue from interest on its asset did not keep pace with interest charges on the deposit at the bank, which have grown rapidly. And why? Because the central bank is increasing the interest. So what a dichotomy that in one institution, same institution, you are raising the interest and then you say we can't keep pace with the interest charges. You are using your left hand to cut your right hand. That is the death wish that is afflicting the bank and the government. The Bank of Canada's aggressive interest hikes this year have raised the cost of interest charges. It pays on settlement of balances. So why increase the interest? I mean, the interest increase was unwarranted. USA is suffering from the same problem, and we Canadians do not use our brains, but we just follow what the Yankees down south are doing. And then more consumer protection needed in emerging payment space caused a further loss. The Bank of Canada is dramatically expanded its assets, as I said, in the pandemic. And that expansion is now costing the bank. As a matter of fact, it's exactly like that as an individual goes on buying property, mortgaging all his wealth and then can't pay. And that calls for foreclosure. Here, since the foreclosure cannot be there because there is a body which is buying it, the financial body, so ultimately the taxes might increase. Now imagine paying for the government bonds with the creation of settlement balances. That's never done. If you look at the history of the central banks of the world, this is possibly the only time when an independent, autonomous central bank has purchased government bank bonds. And the government bonds, why should the bank purchase? They should have been purchased and sold in the open market and let the financial companies or the private investors purchase them. But then the Bank of Canada's governor, Tate McCallum, without a sense of shame, says that they don't affect the bank's ability to conduct monetary policy. Can you trust that institution to control your monetary policy who don't know how to control their own finance? And then he says that the size and the duration of the losses will depend on the path of the interest rate and evolution of economy. Who should decide the interest rate? You yourself. And then he says, following a period of losses, the Bank of Canada will turn to the positive net earning. And then a sign of slavish mentality when he says that the bank is looking to the federal government for a solution. As a matter of fact, bank is the brain trust, the financial brain trust of the country. And if it looks to the bureaucrats and the politicians for a solution to balance the books, that's a sad day for the bank and for the country and for the whole system. Now, there are few options available, undeniably. And the problem before the bank is largely on account of one rather than a monetary policy concern. It's an accounting matter. Plain and simple accounting. It's not a monetary matter. For example, when the bank launched its first foray into quantitative easing, QE they call it, at the beginning of pandemic, it was increasing the money supply by purchasing government bonds. And when you increase the money supply, that calls for inflation. So the inflation started with the action of the bank. If they had not done it, the inflation would not been so high as it is today. And then the Bank of Canada purchased $5 billion worth of bonds. 1 week. $5 billion? Are we hearing right? Yes. That was in 2021. Fast forward to 2022. The Bank of Canada raised the policy rate 6 times and took the benchmark rate to 3.75%. It used to be 0.25%. They took it to 3.75%, increase of 3.5% in less than 1 year. And then the higher interest rate increase the interest payment the bank has to pay to the settlement it created for its quantitative easing, the QE. What? Shall I say stupidity? No, lunacy. Now, other central banks all over the world have their governments put an indemnity in place of negative equity. That's a sensible thing to do. Bank of England, FedEx, Reserve Bank of India, Germany, all over. All central banks have asked the government for an indemnity bond if the negative equity is there. And Bank of Canada has an indemnity in place right now, but the indemnity covers only the market losses, not if they retain the assets. So if they sell the assets worth 5 billion and then the loss is there, then the government would have to recover it. So 2 other options would be to extend the range of indemnity or change the legislation in the Bank of Canada. And if they change the law, that will allow the central bank to retain its earnings to cover losses instead of returning them to the government. Now that is one thing they should have done, but they are not doing it. Because according to the governor of Central Bank, Bank of Canada, their force remains trained on bringing prime and price pressure back to balance. They create inflation and they say our job is to ensure inflation is low, stable and predictable. We are still far from the goal, says the governor. Ah, what an achievement. That's your primary focus and you're far away from this focus. The aggressive interest rates and hikes have raised the cost of interest charges it pays on settlement. And then you would see, unfortunately, it's a problem that the bank holds more government debt. It's a larger player of the government bonds market, so it buys more, which it should not have. But then they wanted to please the political bosses, maybe to get an extension in the governorship. Now, does holding more debt create greater interest risk for the Bank of Canada? Yes. That is what concerns me and you, the average Canadian. Holding more debt would create an unescapable need for the Bank of Canada to increase the interest rate. You see what happens? When the bank buys bonds, it locks in the prevailing interest rate, and therefore what those bonds pay it until they mature. But on the settlement balances, it uses to purchase the bond, it pays the deposit rate. So it's getting the same rate for the bonds of 5 billion, but has to pay more interest because that's a variable interest. You buy the bonds, they are fixed interest. It's the same. You get a mortgage on the fixed rate, it doesn't increase. You buy it variable, it can increase or decrease. So when the interest of the bond the Bank of Canada holds is less than the interest it pays to settlement as is today, the bank would lose money. Simple arithmetic. As I said in the beginning, it's an accounting problem, and bank seems to be acutely short of understanding what accounting problem can be. Now, what should it do? It has a possibility that the bank can draw down on reserve funds and equity, and it can allow even equity to go negative. And because the bank is a crown corporation, and negative equity will not directly impede its ability to conduct monetary policy, but will help the people. However, they are afraid of the public image. Public will not like it. They will perceive the bank as being under pressure from the government to set interest rate lower. Why? If the need, the monetary policy need and the economic need is there, why care about what the public will think? Why can't you explain to the public that this is what is needed? You want the public to accept it. Are you asking for votes on that? Is the economic policy to be decided by the public perceptions? As a matter of fact, in my view personally, the way to solve the problem is to enter the bank's losses as a deferred assets on its balance sheet and a deferred liability on the government's balance sheet. That means no negative equity for the bank. But we have to be clear that the bank must eliminate the deferred asset position before again permitting the profits to the government. The profits from the bank go to the government, but the losses remain with the bank. Is it sort of any justice? No. And this solution would mean amending the Bank of Canada Act, which is currently requiring the bank to split any profits between replenishing its stock and remitting funds to the government. It should stop remitting the funds to the government until and unless it has replenished its reserves. And I propose that it will be transparent to make it easier to convince public and safeguard the bank's independence. Today the bank is in danger of being deemed a failure. Let's be clear, the balance sheet is likely to stay large. And that's not an operational problem, but it does carry the risk of government intervention, and that should be avoided. So, what is required? A small change in law to reduce this concern. We forget that the central banks are set up to operate like any other financial institution. The Bank of Canada has a board of directors that oversees management on behalf of its shareholders. And who are the shareholders? All the taxpayers through the central government. So you and I are indirectly the shareholders. And it has the balance sheet with assets and liabilities. Typically, the Bank of Canada's balance sheet makes money because the liabilities consist entirely of the banknotes, which do not pay interest. On the other side, central bank earns interest on its assets. And then, as per the law, they must send its profits to the federal treasury at the end of each financial year. And recently, they paid $1 billion to the government as the profit. Now imagine you are suffering a loss of more than $500 million and you are saying, paying the government $1 billion of profit. Isn't that an accounting problem? And does it sound sane to you? To me, it doesn't. The Bank of Canada has predated quantitative easing, which it called anti-inflation tactic. An unintended consequence of that policy is that for the first time in its 87 years history, the Bank of Canada is on track to lose money for a much more extended period because the interest rates are going to climb. There's a need to be more perceptive and to be more clear. Unfortunately, the political masters don't understand economics, and economists and the bankers want to please the political masters. And that results in unholy matrimony between the bankers and the politicians. And that is the base of the problem. Would the bank dare to do its job, irrespective of pleasing the politicians or the public, and do the job sincerely, earnestly? Then it can still be seen that this loss could have easily been averted by reducing the payment of the so-called profit, perceived profit, not a real one. Because if the profit they say is 1 billion and part should have remained with the bank itself, say half, then there would be no loss at all. So this accounting problem is creating havoc, and the banks and the politicians fail to perceive it. And therein lies the downfall, economic downfall of the country and the whole system. Think about it. Thank you.